Hello, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joining me today, we've got Steve. How you going, Steve?
I'm good, Ollie. Yourself?
Yeah, going all right, thanks, mate. Back in the hot seat after a week off from the public holiday.
No,
All
your
righty,
favorite
so
public holiday.
yeah, exactly. Well, we love it. All right, so going into the agenda for the video ahead. For all of our returning viewers, this will all look very familiar, but for any of our new faces here, this is how we normally run it. So starting off, we'll take a look at the big events from last week, take a look at our key themes to see how this is driving prices. We'll then take a look at the week ahead. We'll put a spotlight on some of the big events for the week coming up, see how this fits in with our key themes and give our take on where we think prices will go. We'll then move into the technical corner where we'll put a spotlight on a couple of key different markets and analyze them using our technical indicators. And lastly, we'll go on to our Q&A section where Steve and I will answer some of your guys' most commonly asked questions. As well, just want to touch on, as you guys can see on your screen, I just want to make sure that everyone is aware that everything we do discuss in this video is general in nature. Any projections or forecasts we give are not guaranteed, and any indication we give to past performance will not always be a reliable indicator for future price action. So let's move into the last week section. So starting off on your guys' screen, you will see your top 10 traded products from last week. What's standing out to me on there, we've got two pound pairings on there for the first time since late November last year. But how about you, Steve? Any surprises?
My surprise is that you remember late November last year. But yeah, no surprises having £2 pairings, especially with what's to come. So we'll go on to last week. Last week, obviously, we had the Australian public holiday, so Australia Day. Good to have a bit of a shortened week. It feels needed a few reminders that it was actually Australia Day because it's a bit weird coming back and then having a public holiday straight away from the
I'm
sort
so
of holiday
thankful
period.
for it, though.
As for the central bank, so we actually had Bank of Health Canada when it comes to a hold at 2.25, which was widely expected to be on hold. We're not expecting too much sort of changes when it comes to Bank of Canada. However, according to routers, that could actually change, obviously depending on Trump's sort of tariffs. So there could be there could be room for another cut, but however, money markets are really pricing in that there's no cuts throughout 2026, but higher chances towards maybe a hike in the last quarter. So interesting to see how that sort of pans out, especially with that sort of friction between the US and Canada. The main spotlight was really on the US Fed. So we got that sort of decision that was on hold. Before that, there was pretty much, according to CME, for Tool, there's probably about a 95% chance of 95 to 97% chance. So very slim when it comes to a cut or even hike, for example. We saw two dissents. So for 25 basis point cuts being Christopher Waller. So Christopher Waller was one of the nominees potentially for the Fed chair, as well as Stephen Moran, who's been nominated by Trump. Actually, surprisingly, that Moran went from 50 basis points with a lot of the previous meetings, and now he's actually 25 basis. So it's kind of conformed in that way. But
It's
yeah.
probably seen how far I got washed to take that stance, no?
Well, yeah, it's quite surprising that he hasn't dissented his usual sort of pattern. So there was no real surprise, especially with Waller as well being a sort of outside chance when it comes to getting nominated as Fed Chair. The overall sort of speech by current Fed Chair Jerome Powell, who's basically there until May this year, so May 2026, was fairly hawkish overall, where it was basically, again, data dependent. There was a sort of no rush to cut, especially with the better than expected labour market reports. He did describe the inflation as somewhat elevated. So based off all that sort of information, they decided to look at hold. We've previously heard from end of last year that there could be maybe one cut this year as well as one cut next year. But yeah, hasn't changed too much when it comes to that sort of decision. I think it was really priced in. There was more news that came towards the end of the week, which we'll come into very shortly. But locally, with the Aussie CPI, so Consumer Price Index, we got a big shock, surprise. So 3.8 compared to the expected 3.5. So that was a major sort of shock. We also saw the actual RBA trim mean come in as expected. There, there were concerns really around the inflation data, and considering that we've got better than expected unemployment rate, so the unemployment rate's 4.3 compared to 4.4. We're now looking at all four big banks are now projecting that tomorrow, so almost 20 or 23 hours time. So the RBA decision, which will be 2:30 p.m. Sydney time tomorrow.
Which
Like,
we also will be posting in the VIP chat
yeah,
room. Just a heads up on there too, for
yep,
anyone who misses
definitely.
it.
As soon as we've got that, we'll let you know. But there's a good chance that there will be a 25 basis point hike. Right now, the ASIC tracker, looking at the sort of tool, is currently suggesting a 72% rate hike compared to that 28% of a hold, which is like what we've mentioned on previous videos, pretty conservative in my opinion. I'm pretty sure seeing the sort of action, yes, last week, it's pretty much priced in, pretty favorable. Obviously, the Aussies kind of pulled back ever since breaking that 70 cents barrier and hitting a sort of high we haven't seen since February 2023. So even now, 2022, last week, we saw it really touched those highs. We saw the US data, so a lot of the sort of jobless claims as well as the inflation, especially the producer price index, being higher than expected. But the biggest movers probably last week. So we saw, with the gold and silver, as well as other commodities, have all-time highs. But then everything kind of unveiled probably towards the end of the week. So before it was actually announced on Bloomberg live that the Trump administration was just preparing for basically Kevin Warsh as the next Fed chair. So previously we said that Trump did rule out Kevin Hassett. So we had pretty much, we kind of predicted, I guess, the odds that it's going to be Kevin Warsh, and we've discussed it quite a few times when it comes to the outsiders being Christopher Waller, who was one of the dissenters. There was another name mixed in, but it was pretty certain, that he'll probably get it after Trump ruled out Kevin Hassett. But yeah, it was a surprise announcement that really shook a lot of the markets, gold, silver. So, fingers crossed you had that sort of risk management strategy, because that was a wild swing. I was looking at that on Friday, the low liquidity, and that was just, yeah, I've never seen anything like that in my life. But
Biggest single day decline on record
yeah,
for silver, wasn't it?
yeah, at least for, yeah, it was
Yeah.
biggest on record, and I think we haven't seen it since like 40 years or something like that. But we'll go into this week. And we are going to, in the questions, we'll be talking more about Kevin Warsh and understanding, how that actually impacted the market. This week we do have, like what we've kind of had a sneak preview around the RBA expected 25 basis points hike. Obviously, we've also seen a few moves from banks like the CBA, where they've increased the fixed rates by 70 basis points, as well as NAB, as well as the other banks have really followed, and Macquarie, for example. So there shouldn't be any sort of surprises. I think it's really priced in. It's really about the statement, and a lot of the questions are going to be directed at probably Governor Michelle Bullock, just in regards to around the inflation, around the sort of goals that they're trying to set, especially also after the IMF called out Australia and Norway having high inflation. So that's really going to be probably, I'd say, a challenging questions, I'd say, because there's a lot of heat, I guess, really on the RBA being the first within the Western economies to basically potentially rate hike. We're going to look at Bank of England is expected to be holding. Bank of England is one of those ones where it's been closer. They've been trying to control the inflation on their side, and it's probably the one that could see a bit more easing cycle. But it'll be interesting to see with those of consensus. I know that Ollie, you've looked at a lot of the Bank of England. What's your thoughts on their sort of decision?
I think for the Bank of England, it's going to be a period of holding. So I do remember when they had their budget meeting, they did drop their interest rates 25 basis points, but that was more just on anticipation of an increase in spending out there. But I think inflation's still a bit of a key concern for the Bank of England. I can't imagine there's going to be too much of a sway around on terms of the decision to hold.
Yeah.
I do think hiking is quite unlikely as well. I honestly do think it's kind of a wait and see until we see the inflation data come down.
And
Sorry. I was going to say, yeah.
hopefully they don't fumble like last time when it comes to the budget release. So I remember you mentioning, obviously, the budget release. They just announced.
Came out earlier than anyone thought. It just shocked the markets. But I guess on that sort of stick as well, same sort of deal for the ECB. I don't think they're forecasting to move rates, and I don't think there's going to be too much of a sway away from their policy anytime soon either. It seems that they're at a pretty good point to make a decision.
Yeah, no, definitely. I think with the ECB, it's expected to hold at 2.15. I don't really see too many sort of changes when it comes to that. So it's already pretty low as it is. I think we're more looking probably at the Bank of England as well as the US when it comes to the easing cycle. A lot of the central banks are probably towards the end of the easing cycle, and it's more either hold or hike. We've got quite a few sort of data points. Also, what we probably didn't have in the slides before was around the China sort of PMIs as well as non-manufacturing PMIs, which came out weaker. Today, we also had the Caxin or the rating dog indication, which is a private survey, which came in as expected. So, that shows a bit of weakness in the second biggest of the economy. We do have some sort of data points coming up this week, a lot around the employment. So New Zealand, will be interesting to see how New Zealand's going. Obviously, there, and as well as Canada. Canada, we've described previously about the unemployment being a bit different with the dynamics when it comes to their percentages based on the actual people. We've also got a lot of the US heavy data, so it'll be interesting to see with not only the ISMs, so more around the manufacturing side of things, but also the ADP, non-farm employment, as well as we've got the jobless claims and unemployment rate again. So it'll be one thing that obviously Fed Chair Jerome Powell mentioned about the unemployment rate being fairly stable at the moment, and it's really just focusing on the inflation data now. We do have also the Japan lower house elections on Sunday. Ollie, I think you've got more context for us on that, maybe.
Yeah, I'll touch on that one in the Q&A, so I'll have to leave everyone waiting for a little bit. But for the moment, I will jump into the technicals. So let me share my screen with everybody. I am quite conscious of the clock as well, so I will just roll through these ones quite quickly. But starting out, I wanted to take a look at the pound against the US dollar. This is on the weekly chart, obviously ahead of the Bank of England decision, as well as a pretty sizable increase on the US dollar index on Friday. I thought it was interesting to see where we're sitting. So on the weekly, you can see there's a large bullish trend dating back since the start of last year, really. That one was pretty consistent. We did see it touch on a yearly high around the end of June. And then we did see a bit of a decline on there. We can see that by the descending channel as prices did move into their moving averages on the weekly chart. Most recently, over the towards the end of Jan, we did see very sizable gain on the pound against the US dollar, and it actually did trade into its highest dating back since January 2022. That actually did trade above 1.38, which is a pretty sizable gain, I would say, over the past 2 weeks. But where I do think is quite significant on here is I'm seeing a very long top wick on the most recent weekly chart, which, if we do want to take historical data as an indication for what could happen, last time we saw a very sizable top wick on the weekly, that was actually the start of our descending channel on here. Have spoken, obviously, previous price actions not always a reliable indicator for what is going to happen, but it is interesting to think what we could see here. So for the week of where we're sitting, I'm looking to see if the more recent term bullish trend, pretty much dating back since November, is still in play, or if we are looking for a bit of a further pullback on prices to trade back down towards its moving averages. So moving that into the daily chart now, get an understanding of where we are sitting. So as I mentioned, we did trade into its highest price since 2022 to actually start the week. That was Monday, Tuesday, and then we did see prices gradually decline over the course of the week. But for where prices are sitting now, and I do think this is actually quite a key level, because where we are sitting is actually at its prior resistance from its swing high in the middle of September before we traded down. So we actually did see a clean break and a hold above its prior resistance. And for where we're sitting now, we could see it form support here. So I'm waiting for a signal to confirm if the bullish trend is still in play. If we do see the prices hold support above this level around here now and then start off today, I do think we could push higher to then retest the 1.38 and a break and hold above that, retest its yearly highs. Similarly, though, I think if we do see the prices trade down for the day, trade back below this level, I do think we do have a little bit of an area to come back towards its moving averages personally. If we're seeing on the RSI, we were very much hovering in the overbought area for the large part of last week. It was only this sizable drop on Friday, which actually pushed us down into its ideal range for the RSI. Got the MACD sitting above its signal as well, which is telling me there is some bullish pressure, but I'm waiting for a signal either side. If I am a buyer in this market, I'll probably be looking to manage my risk around this key level just here, which we are sitting above as it stands. However, if we see the prices make a drop and hold below this, I'll also be looking for this level to act as a risk management if I am a seller in this market. But again, still waiting for a signal of confirmation. The next market I wanted to take a look at is the NASDAQ. So obviously, given the moves going on in the Fed last week, we've actually seen some quite sizable moves. So I'm going to start off on the weekly for the NASDAQ. So we can see we're in a pretty strong bullish trend that's been dating back since the start of April last year. We can see it traded towards an all-time high towards the end of October. And since then, we have actually been ranging. After that one, we did see, after reaching the all-time high, we did see a sell-off where we did see it then find support on its 20-week moving average, traded up, found resistance, and has since been ranging. So I'm looking to see here if we are in for another week of ranging, if we are looking for prices potentially go and retest an all-time high, or if we do think there is some bearish pressure on here to come back towards its moving averages. If we're looking on our RSI, the RSI is below its signal line, which tells me there is some bearish momentum. That's also shared by our MACD line, which is below its signal line, creating some divergence in there, which is telling me there is some bearish pressure. Moving that onto the daily chart now. Again, I am waiting for a signal of confirmation. Most recent price action, we actually did trade up to start the week last week before finding resistance just shy of its all-time highs and having a pretty strong reaction to trade further down. Where I do think it's significant, though, is that if we do trade further down, as the daily trend is looking at now, it will come towards its 100-day moving average, which if we're looking on historically, we have seen it does like to react to this level when it does trade into it. So wait to see on that one. Otherwise, if we do see prices find support around where they are now and then push higher, that'll be adding to a sequence of higher lows, which tells me there's some bullish pressure on there as well. So again, I'm waiting for a signal either side. And if I'm looking to manage my risk on either side of that as well, I'm going to be looking towards my moving averages here as the key price levels where I can look to manage my risk. Okay, so that brings us to the end of the technicals on there. So now moving into the Q&A section. Steve, would you like to take away?
Yeah, so question one is, who is Kevin Walsh, as well as what does he mean for markets as potential Fed chair? So previously, Kevin Walsh has actually been on the Fed from 2006 to 2011, and he's actually impacted the market last week because he's seen as more of a hawkish. So he's more, instead of Kevin Hassett, for example, who's more dovish. He's well renowned within Wall Street, so everyone knows what he's like. He's also pro when it comes to crypto. So there's been a few things that he's said previously on crypto. So we've got a candidate now who potentially, with the Fed unbalance, we did have Trump actually speak last week, said that he did have a chat with Kevin Warsh about interest rates, but he believes that he'll actually do what's right by the Fed. But he also did do a sort of joke saying that maybe he will reduce it. So it's hard to see the impact, but there's more of a chance that he's actually not going to be impacted so much compared to Kevin Hassett or the likes of Christopher Waller. So that's why we're seeing more of that sort of stance when it comes to markets and just weighing in. So it is fairly important, and we'll just have to control that sort of volatility. But yeah.
All right, thank you. And I'm taking it away for question two. So, what can we expect from the Japanese elections this week? So, this coming Sunday, we've got the lower house elections for the Japanese parliament. In this meeting, so we're looking at Takeichi, particularly has called this election, is looking to capitalize on a 67% approval rating. That was as of this morning. Essentially aiming to get a bigger majority in the lower house to push her agenda. So what can we expect for this as traders? Particularly, I would say if you're trading on Japanese or JPY pairings, as well as the Nikkei, you want to keep an eye that there is the election on Sunday. So on Monday, we could see some volatility in the markets. So definitely would suggest taking a look at your risk management strategy for those if you do plan to hold those positions over the weekend. But in terms of what it's going to do to price, I personally don't think it'll have too much of an impact on here. Takeichi has already been in the seat for coming on a couple months now. We've already been very well publicised about the fact she is historically yen negative. So on that, I would expect to see a bit of a boost in the Nikkei should things all go her way, should she get that larger majority. As well, we could see some bearish pressure on the yen, but there's all the talk about the yen intervention anyways, so I don't think that's going to actually be the biggest factor moving it come the end of the weekend. All right, so that brings us to the end of the video today. So a recording of this will be uploaded on YouTube once we have concluded. As well, we will be posting a link to this in our VIP chat room as well as on Telegram. Mentioned before as well, but anyone who is looking to get involved with the VIP chat room and look to send any questions to us, please feel free to reach out on the VIP chat room or send them to Steve and I directly. That's all from me this week. Thank you everybody for watching, and Steve, I'll see you later.
Thank you, Ellie. Have a great evening.